Hey guys, Akil here. Welcome back to another video. First and foremost, thanks to everyone that attended our Truth About Trading event last week. Awesome workshop. Great to see you guys on the internet getting to work throughout the workbook already. And remember, if you didn't get a chance to see the event or if you just want to catch up, recordings are available until the end of November. Speaking of which, this is the final week, or I guess final full week of November, and it's an interesting one in the market. It is typically a slower week because we have a US holiday coming up towards the end of the week, but we also have a bunch of high impact news events coming out right before the Thanksgiving break and even during the Thanksgiving break. So make sure you pay attention to the economic calendar. We're going to get started today with following up on the dollar Canada. This is one that we've been dead on for the last 2 weeks. We had a bearish opportunity 2 weeks ago with the head and shoulders. We called a bullish opportunity last week with the completion point of that head and shoulders and the reversal. And I want to dig down to a lower time frame here and just take one more look and ask ourselves the question, now that we've held this level, where are we likely to go next? And you can see the market did a nice little pattern here. This was something we talked about in the workshop about accumulation, markup, distribution, all of that fun stuff. But you can see price action came down, and we started to consolidate. We started to put in a little range-bound session, which is normal in the market. And what we were looking for was, boom, a pop, a break out of that range. You can see we did that. We came back to retest, and now we're working on extending up, ending the week with a just slightly, but technically a higher high, higher close. So now the question is, if we're going to see a continued move higher, where are we likely to see that continued move higher to? I apologize, I've been away all weekend. It's early in the morning. You can tell the voice is raspy, so forgive me for any missed words and stumbles, but I want to get this video out before I got to head to my kids' soccer games in the semifinals of a tournament, right? Scored 2 goals yesterday. See if we can get one more win and get to the championship. But anyway, enough about me, more about the markets. The point that I would anticipate price going to is right here. We spoke about elephant candles. We didn't really dig into supply and demand during the workshop, but I gave some clues on how to identify it, or at least what I look for in supply and demand levels. And a level right here that gives me interest is going to be this area right here, the consolidation period before this big drop off. So this is going to be a good point to target as a completion point. And just like we spoke about, there's 2 ways you can look at this, right? One, this could be a level where a counter trend trader is looking to get short. So you're looking to put your trade on here and look for the next move down. Or if you're a continuation trader on the lower time frame, you can look for buying opportunities in advance of this level. Of course, if you're a seasoned vet, you can do both. You can buy, stop and reverse, and sell as well. Now, just to add a few more things here, using our technical tools, if we take a Fibonacci retracement from our swing high to our swing low, you'll see we have a 50% retracement right in there. We can take one from our smaller swing high to swing low right here. You can see we have an 886 and a 786 surrounding that area. And we can take a Fibonacci extension from our last extended move up. So the bottom of our range here to the breakout point and back down. And you can see we have a 1618 Fibonacci extension in that area as well. So a pretty nice area of confluence, along with an even handled number, psychological number, 135 even. If you ask any of our traders, they'll tell you this level has been important in the past. Just look left, structure leaves clues. So a pretty decent point to aim for. Lastly, some of you guys may have this as a bat pattern as well. We know I's are a little bit different, but X to A down here, A to B, our first retracement coming to that 50%, B to C, and then a CD completion right there for a bat pattern. So a lot here on the charts. And before we go on to the next pair, I want to address a comment I got last week here on YouTube where it says, hey, Akil, I'd love to learn this stuff, but it's far too complicated. And I apologize, right? The YouTube channel doesn't kind of, it's not geared towards a certain base. It's not geared for completely new traders. This isn't like a training course or anything like that. It's not geared for advanced traders. It's geared to really give you guys an idea of what I look for, how I trade, and kind of reinforce the basic principles that I believe in the market. Understand if you're new, I don't want you getting overwhelmed. There's a lot on your chart, but how we teach it is we go step by step, or how you should learn is step by step. So there's no need to kind of throw all this on your chart at once. Start by learning to read price. Once you learn how to read price, and it's going to be very easy to identify key levels of support and resistance structure. Once you can do that, then it's very easy to draw in AB equals CDs. It's very easy to draw in Fibonacci's. So with anything, no matter what type of trader you are, you don't want to try and do everything at once. Start with the basics and then build from there. I've been teaching since 2012, and trust me, at least in my opinion, that is the best and most efficient way for you to learn technical analysis. Next up is Aussie dollar. Aussie is another one that broke out of a consolidation area. You can see our head and shoulders pattern down here. Left shoulder, head, right shoulder, neckline broke, and we moved up into a previous level of structure. Again, look left, structure leaves clues, right? These are those ice zones or those structure swap zones that we spoke about in the workshop. So an area where we could see some relief. And if we go down to the 4-hour here from the daily, you're going to see an interesting pattern form. So we shot up, right? We put in a little bit of a rising channel, right? Equipped with bearish divergence here. And we saw some relief, right? But that relief actually broke and closed below the starting point of this rising channel, giving us a little bit of a rotation. We then retraced back up, put in a nice 3-bar reversal here. And it wouldn't surprise me if we saw an extended move back down. Now, the hardest question about this that you have to answer is, if we're going to extend down, where are we likely to extend to? Because there are a few levels that stand out. I'll draw a few lines out. One is right here. This little pregnant pause, this little small red candle in between kind of the bigger bullish high momentum move. There is a inside level of structure right below, and then there is a previous level of structure right down here, right? And really, there's no answer to this, right? We wouldn't be wise in our decision making, but different traders are going to have different levels of aggressiveness. Different traders are going to have different levels of conservativeness when it comes to taking targets. But these are 3 levels that, in my opinion, you should pay attention to. A few things that we can use, and this is going to give a nice clue right here. If we take our volume profile and just take it from this swing low to our swing high right here, we can see where the main interest in the market is. And surprisingly, it's not as much up here as I thought. I thought we'd see some bigger spikes in this first level. We really didn't. The main spikes don't come in until we get down here at this red line. So if you want to kind of pinpoint or get a better idea of where the important levels are, really it's going to start right in here. And after you have that level drawn out, now you can add some confluence. Maybe you take again, Fibonacci extension, swing high to swing low and back down. You'll see a 1618, not that far down, but right in that upper zone right there. We can take Fibonacci retracements again from our bigger move, swing low to swing high, right there. We can take it from our smaller move, swing low to swing high, right there. And you can see right in this area, we have a lot of confluence. Again, we have a 618 Fibonacci retracement, which is the golden mean. We have a 50% Fibonacci retracement, which is not technically a Fibonacci number, but a very psychological number, 50 cent, right? 50, 25, right? Quarters, halves, humans like that. And then we have that 1618 extension as well, which is the another golden mean area. So although the volume picks up a little bit lower, right, because we have many of our tools lining up in the same location, if you're looking for a conservative place to get involved or get out of the trade, I should say, I think this level right here is going to be your best bet. This level up here is still a very conservative one. Nothing wrong with putting a very small, taking a partial position off here. But if you want to get a little bit more bang for your buck, aiming lower could be the case. And just like we spoke about in the workshop, one of the biggest issues that I see with traders is that they don't pay enough attention to placing good targets and placing good stops. Everyone worries about the entry. How do I get in? Where do I get in? Which is good. But more than half the battle is also figuring out when to get out. And we saw from that study, right? Most traders don't have a problem getting into a trade or getting in the right direction. The problem is knowing when to get out. And again, there's a psychological side of that where you're just self-sabotaging yourself and whatnot. But there's also a technical side of that as well, where you're just not great at picking the right locations. And that's because traders just tend not to practice it. They overlook it. They only worry about getting in, and they figure the rest will kind of just work itself out. The truth is, it doesn't. You got to put in just as much work on your exits as you do with your entries. Next up, Euro Pound, the rare Euro Pound sighting. But we got an interesting thing happen at the end of the week here. We actually broke below this structure self, right? You can see we pushed up. We've been kind of churning at this level, churning as the Euro Pound typically does. And we ended the week with a lower low, lower close. So again, going through our rules of technical analysis, if we have lower low, lower close, then I predict price is likely to continue lower. The question I want to ask myself is, if price is likely to continue lower, then where are we likely to continue lower to? This is that IPDE process that I think all of you guys should follow in your trading. And if we look left on our chart, again, the next level that really comes to mind is going to be this bigger zone right here, right? We have a nice little inside level of structure here, and then we have a little structure shelf there as well. Once again, we could do stuff like bring in Fibonacci. So Fibonacci retracement, swing low to swing high right here. You can see we're just at a 618. We don't have a 786 until the top of this inside shelf right here. We can also bring in our volume profile, swing low to swing high, see if there's anything that stands out. And once again, you can see there's a void, a big void in this area right here, surprisingly actually. And our void doesn't pick up, or our volume doesn't pick up, I should say, until we get a little bit lower. So if we're trying to decide between, hey, what level do I want to focus on here? Is it going to be this top level right here, which does have some reason to, pay attention to it, or this lower level? This volume tool is going to help us decide, hey, this lower level is a safe level to go for here. So nice trading opportunity here on the euro pound. Look for shorts. The one thing that does bother me a little bit is this wick right here. It's really sneaky, but it does show that price pushed up and then pushed back down and continued up. But again, surprisingly, we didn't get a lot of volume there at all. So, hey, we can only do use what our technical tools tell us to use. But keep that in mind as well. Notice it, but don't necessarily be afraid of it.